afternoon, Miss. Today I'm going to discuss the chapter 2, which is credit. So, define and explain thoroughly what is credit. Credit refers to the ability to obtain a thing of value in exchange for a promise to pay with a money or something that is equally satisfactory to the seller at some future time. It involves two parties, which is the creditor and the debtor, where the latter does not give money back immediately to the first party, thereby generally a debt. It is not necessary that the credit be based on formal monetary system, so the credit can be applied through the barter economies on the direct exchange of goods and services. With or without money, credit can still exist for as long as there was a parting of something of value and recognition of obligations by the other party, and it is donated by a unit of account. So next is describe the credit economy. So credit economy is an economic system where the objective by the authorized government is to improve social and economic condition, more importantly of the poor. So this is where borrowing and lending takes place. Individuals, business, and governments often rely on credit such as loans, credit cards, or bonds rather than just saving to fund consumption. So financial institutions like banks facilities this in exchange of interest. So this system encourages greater spending and invest that might otherwise be possible and consumer and business can purchase goods, properties, services now and pay over time. However, while credit stimulates growth, excessive borrowing can also lead to financial stability, making the management of debt crucial in maintaining economic balance. So next is enumerate and explain advantages and disadvantages of credit economy. So in advantages, first is it generates additional funding. It allows business firms to generate or acquire cash loans by using their existing fixed asset like machines or buildings and as security or collateral instead of selling a part of their physical properties to obtain money. So this is additional funding for them to have or acquire this kind of money instead of selling their physical or existing properties. Next is it presents opportunity. It gives chance to dynamic and enterprising men to capitalize the opportunity to put up their enterprises through credit. So they can basically start a business by with a credit. So next is it can increase government spending. It allows the state to undertake deficit spending rationally and timely. Government programs can be funded through bonds and loans. So next is it benefits the economy. It accelerates opportunities, employment, income, and consumption. Next is postponed financial outlay. It permits low-income consumer to enjoy the consumption of goods and services sooner, like house, lots, cars, appliances, and other products. Example of this is like the home credit. And also credit economy has also disadvantages. This includes credit may lead to inflation. Having borrowings by government may likely lead to inflation. It requires competent and dedicated monetary authorities, economic planners, and cooperations of top government officials to use properly local and foreign loans. So it can lead to waste of resources. Borrowing by the government may result to extravagance and efficiency. So next is, unlike cash, credit has a pervasive effect. Pervasive effect that the business errors in use of credit funds more have favorable chain effects on the whole economy. Failure of some firms to settle their debts with other companies affect the latter to pay their bank loans. So it affects the whole economy. So it can burden the next generation. Excessive loan from other countries by government may likely be a burden to future generations unless each loans are wisely invested in the economy for the benefit of the masses, not just for a benefit of one, but a benefit for a whole. So it can reduce spending, number 5. So a debt constrict confidence in consumption, sales, and production slowdown, which can lead to reduction of employment. So 4 is enumerate and explain the foundation of credit. First is assistance. There should be assistance for both debtor and creditor and laws that protect them enforcing the right. As for borrowers, so that they won't fall victims of opportunities lenders who extend the unchristian manner, making them borrow into debt because of high interest. These are lendings that not legal. So number 2 is confidence. The openness and willingness of the creditor to be exposed to uncertainties by giving out the money of property So this is uncertainty since the creditor gives the money or let the debtor borrow money without they 100% sure of pay for be able to be paid back, just an exchange of promise to pay in the future. So 3 is facilities. There should be a conducive environment for credit transactions with appropriate information presented to both parties. So number 4 is stability of money. The money standard must be stable to protect both parties. So value of money should not fluctuate widely since it will cause purchasing power to be uncertain. Next is the number 5. Enumerate and explain the basic characteristic of credit. So first is the bipartite in character. A credit transaction by description is usually reciprocal to in strict substance, which spring from the trust and confidence of the creditor and the duty to fulfill obligations by the debtor. Next is it is fiduciary. Credit has based on trust expect for the monetary increasement because there is no other basis why in the first place would give money in the property today, the simple reason of getting the said money back in the future. It is most and trust and confidence. So fiduciary trust and confidence. Next is it involves futurity. Since there is a promise to pay, a credit transactions is just need to be satisfied by one party with confidence of getting paid in the future. Number 4 is financial in nature. It involves something with economic substance as now credits are expressed in terms of volume of goods or and monetary equivalents. So number 5 is there is always element of risk. So when you have credit, there is always a risk because credit is exposed to uncertainties considering that it involves futurity. The danger of not being paid is always present. There is so many things that could happen after lending and before payment. That is why interest is exposed as payment of risk. Number 6 is what is credit card and explain its advantage and disadvantages. So credit card is a plastic card with a magnetic strip or chip that many people carry in their wallets in the result of complex banking process. This helps us to be convenient in paying and going without hassle or bringing a lot of money. So advantages of it is that the ease of purchase. Make it easier for you to buy things. It is also convenient if you don't like to carry a large amount cash with you. In modern technology, most of the store allows the digital payment, which is credit. Protection of purchase. Credit card statement can vouch for the fact that you have made a purchase if the original receipt is lost or stolen. Number 3 is building a credit life. Having a good credit history is important, not only in applying for credit cards, but also when applying for things such as loans, rental applications, or even some jobs. Because when you have a good or credit line, so it is easy for you to apply another loans or such real estates or in bigger loans. Emergency. Credit card is useful during emergencies when you don't have enough cash as of the moment, and so you can use credit at the same time. So credit card benefits, points, and bonuses. Additional benefits such as discount from particular stores, bonuses such as free airline miles, discounts, special insurance, and interestingly, card points. So now we're down to disadvantages. Blowing your budget. It encourages people to spend that they don't have, like beyond their means. High interest rates and increased debt. Company charge you for enormous amount of interest on each balance and you don't pay off at the end of each month. So this will increase your debt. This is how they make their money and how most people get into debt. Exactly. Next is credit card fraud. It can be stolen. It can physically or may steal credit card number from a receipt, from a phone or website and use it to rank or put up your debts. So number 6 is enumerate and explain classification of credit. According to categories such as according to users, so consumer credit refers to a short and intermediate loan used to fund acquisition or commodities or service for personal consumption. So from the word itself, consumer, so it is as of the meantime and for personal consumption. So next is bank credit, refers to the credit extended by commercial banks for purposes of assisting businessmen. So this is for those people or entrepreneurs who want to start a business in the future. So bank credit, they use bank credit. So according to purpose, agricultural credit, so any credit arrangement used in finance agricultural transactions. Now in modern world, there is a credit for agricultural which is very accessible for almost. Industrial credit, commercial credit, or business credit refers to the ability of a business to obtain goods and services from a supplier. Next is real estate credit. So basically real estate are known for, especially here, It refers to a credit extended for purposes and construction, expansion, acquisition of real estate such as land, house and lot, and buildings. Next is export credit. Credit that is connected to an export transactions. This is the foreign buyer substantiated by a shipment of goods, delivery of services to a foreign business entity according to maturity. So short-term debt, prearrangement of which is that payment will be made within 1 year or less. If it is 1 year or less, it is short-term credit. So medium-term credit term is that a year but less than 1 year. Less than 5 years. For long-term credit, maturity of 5 years or more. According to manner of repayment, lump sum payment will be made in one single stand and agreed time in the future. If take lesson that the lump sum is only paid or in one agreement or one transactions. Installment payment wherein total amount will be settled in some agreed time, not only one. Next is according to release of the loan, lump sum refers to one-time giving of the loan. So as previous lump sum, it is the payment will be made once. So and also in releasing the loan, it will be released once. Next is installment release, periodic giving out of loan depending on pre-agreed basis. According to security credit. Secure loan is a type of credit, the arrangement of which is dependent in some specific item that would serve as a security. Unsecured credit character loan where no property is being used as security or a collateral if the loan will not be paid, so it is unsecured. Direct credit, loan by a bank to its own client excuse me, customer without employ of a third party like the dealer and other institutions. Alright, so